So I started investing in the stock market back in 2017 and I've made a lot of mistakes. Wish I didn't do them. And these mistakes are very common in new traders and investors. So to make sure you're not doing these mistakes, don't forget to watch this video until the end. So the first mistake is not educating ourselves. One of the biggest mistakes that people do in the stock market is to not educate themselves. By not educating ourselves, we are risking all of our hard earned money onto something that we don't understand. We even end up trading or investing on stock tips from your friends, families, or even unknown people. This is a huge gamble that we take. It's important to learn about fundamental analysis, technical analysis, how to manage risk, how the market trends work, and there is a lot more to learn about the stock market. So instead of starting out without any knowledge, try learning about the stock market a little bit every day. This will help you gain more confidence and will also help you make more profits from the markets. The second mistake that we do is not setting clear goals. Why do we want to start trading or investing in the stock market? We generally start trading in the market without setting clear goals. All of us start with just one objective: making money. But we should be clear with our goals, whether we want to generate regular income, are we investing for the short term or the long term. Doing this helps us create clear investing or trading strategies and keeps us focused on achieving our goals. Mistake number three: not creating a trading plan. This is something that many of us don't do before we start trading. It's important to create a trading plan that includes your entry and exit strategies, your risk tolerance, your position sizing, and also your stop loss levels. Creating a trading plan helps us create a structure of trading and also makes us disciplined in our approach towards the markets. By not creating a trading plan, it's possible that we take impulsive and emotional decisions which are not always right for us. The fourth mistake to avoid is not practicing before starting. It's important to create a winning mindset before we start our trading journey. What most of us do is we put in our money directly into the markets and we start trading. This is the wrong approach. What we should be doing is start out with paper trading or virtual platforms. This helps us gain confidence in the system that we've created and also helps us refine our strategy of trading. The fifth mistake to avoid is not managing our risk. This is a very common mistake that people do when they start out. We feel that a particular trade is going to win big, and we put in a large chunk of our money towards this trade. Yes, you might win big, but what if the trade doesn't go as per your plan? You end up getting stuck in this trade for a longer period of time than planned, or the worst case, you might even lose money. It's important to understand the risk we're taking in every trade that we do, and it's also important that you diversify your portfolio. We shouldn't be putting more than 10% of our capital towards any single trade. This helps us manage our risk and also helps us in diversifying our portfolio. What this does is, if you're stuck in one or two of your trades, you still have a large chunk of your capital in your hand that can keep your ball rolling. The sixth mistake to do is not having the patience and discipline for trading. It's important to have patience and discipline in the stock market. What unsuccessful traders do is they chase quick profits and they don't stick to the trading plans. They allow their emotions to dictate their actions, which makes them vulnerable to losing money in the market. This makes us lose control of how we trade in the market and we start to lose the discipline that is required to achieve our goals. The seventh mistake is to not take trading as a serious business. One of the biggest mistakes full time traders do is to not take trading as a serious business. Most of the unsuccessful full time traders take trading too casually. If you're thinking of starting out as a full time trader, then you should be investing in it like a business. You can't be expecting that you'll be investing 10 or 20,000 in the market and be a full time trader. You need to have some serious capital to start out as a full time trader, and you should be treating it like a business. This is one of the most important things to understand if you're considering becoming a full time trader. So, if you want to be successful in the market, make sure you don't make these mistakes.